Welcome back to the deep dive. Today we're going deep on crypto, and specifically your collection of recent headlines that have everyone talking some pretty explosive stuff here.
Yeah.
We've got institutional adoption tech advancements that seem ripped from science fiction and mainstream integration that's making even your grandma ask about Bitcoin.
Yeah, what's interesting is how these seemingly separate headlines all point to a single compelling narrative. And that is crypto is evolving at warp speed and it's starting to reshape the financial landscape as we know it.
Okay, so let's unpack this. You've flagged several headlines about Bitcoin ETFs exploding past the $100 billion mark in assets under management, BlackRock, Fidelity, Vanguard. These are the giants of finance, and they're not just dipping their toes in the water anymore.
No.
They're diving in headfirst.
It's a complete 180 from just a few years ago when institutional investors were mostly on the sidelines, skeptical of crypto's volatility and lack of regulation.
Right.
Now they're seeing it as a legitimate asset class one with enormous potential for growth and disruption.
And it's not just about following the hype, right? There's a deeper strategy at play here.
Exactly. These institutions are betting on the underlying technology, the blockchain. They're seeing the potential for tokenization to revolutionize not just finance, but potentially every industry. Imagine a world where physical assets like real estate or fine art are represented digitally on a blockchain, making them instantly tradable and more liquid.
Wow.
That's the future these institutions are investing in.
So does this mean we're seeing the early stages of a full-blown digital asset revolution?
It's certainly possible, and the SEC's recent approval of the first Solana ETF just adds fuel to that fire. Now institutional investors have a regulated way to gain exposure to Solana, a blockchain platform known for its speed and scalability.
What's particularly interesting about this is that Solana has a thriving ecosystem of decentralized applications and a booming NFT market. It's almost like the SEC is saying, okay, we get it. This isn't just about Bitcoin anymore. The entire crypto ecosystem has matured, and it's time to take it seriously.
That's a great point. It's no longer just about the price of Bitcoin. It's about the potential of blockchain technology to fundamentally change how we interact with value and information.
Speaking of technological change, we've got to talk about the Ethereum 2.0 upgrade. This has been years in the making, and it finally launched recently, for those who aren't familiar. This upgrade is basically a complete overhaul of how Ethereum works, shifting from a proof-of-work consensus mechanism to proof-of-stake.
And that shift has massive implications. Proof-of-stake is much more energy efficient than proof-of-work, which addresses one of the biggest criticisms of Ethereum, its environmental impact. But it also lays the groundwork for greater scalability, meaning Ethereum can handle more transactions per second, reducing those dreaded gas fees that have plagued users for years.
I can already hear the cheers from the DeFi community. Lower fees and faster transactions could be a game changer for decentralized finance, making it more accessible and attractive to a wider audience. And with Ethereum's dominance in the smart contract space, this upgrade could have ripple effects across the entire crypto ecosystem.
Absolutely. And let's not forget about the potential impact on ETH's price.
Yes.
Many analysts believe that this upgrade could be the catalyst that sends ETH to new all-time highs.
Now, while Ethereum is going green and scaling up, Bitcoin is taking a different approach to tackling its scalability and cost issues. The Lightning Network, you flagged a headline about its incredible growth. We're talking a 500% increase in just 6 months. For our listeners who might not be familiar, can you explain what the Lightning Network is and why this growth is so significant?
Yeah, so think of the Lightning Network as a layer 2 solution built on top of the Bitcoin blockchain. It allows for faster, cheaper transactions off-chain, similar to how sidechains function. Essentially, it takes a lot of the transaction load off the main Bitcoin blockchain, making it more efficient and less congested.
So does this mean we could finally see Bitcoin used for everyday payments, like grabbing a coffee or paying for groceries?
That's the ultimate goal, and this explosive growth suggests we might be closer to that reality than we think.
This brings us to one of the most buzzworthy themes in your stack of headlines, mainstream integration. We've got Elon Musk and his xAI project planning to integrate crypto payments into X, formerly known as Twitter. And of course, the internet is going wild with speculation about Dogecoin's role in all of this.
Elon's always been a wild card, but his involvement has undoubtedly brought more attention to crypto, both positive and negative.
Right.
But if X, with its massive user base, becomes a hub for crypto payments, that could be a major tipping point for adoption.
Especially if they make it easy and intuitive for users. Imagine sending a Doge tip with a single click. That's the kind of user experience that could bring crypto into the mainstream.
Absolutely. And speaking of mainstream adoption, we can't overlook Ripple's recent landmark banking deal.
Yeah.
They're planning to integrate XRP into cross-border payments for a major banking consortium. This is huge.
Right, we're talking about XRP potentially becoming a global settlement standard. That's a far cry from the days when it was just another altcoin trying to find its footing.
This deal shows that traditional financial institutions are not only taking notice of crypto, but actively exploring ways to integrate it into their existing systems.
It's like the old guard is finally realizing that they can't ignore this disruptive force any longer. They either adapt or they risk being left behind.
And this brings us to a crucial question. How are regulators responding to all of this? Because as crypto becomes more integrated into the financial mainstream, the stakes get higher and the need for clear regulations becomes more pressing.
You've got a headline about the U.S. Treasury considering launching a digital dollar by 2026. This is a big deal because it signals that governments are not just watching from the sidelines, they're actively exploring their own digital currencies known as CBDCs.
And the implications of this are far-reaching. Some see it as a validation of the concept of digital currencies, a sign that the future is digital. Others worry about the potential for government control and surveillance.
It's a complex issue with no easy answers, and it's definitely something you, as an informed crypto enthusiast, should be paying close attention to.
Yeah, it's a fascinating paradox, isn't it? On the one hand, you have governments exploring CBDCs, potentially centralizing control over digital currencies. On the other hand, you have Bitcoin miners turning to nuclear power as a way to address energy concerns and gain more regulatory acceptance. That's one of the headlines you sent that really caught my eye.
It's definitely an unexpected twist. Bitcoin mining has long been criticized for its energy consumption, but now we're seeing some mining firms investing in small modular reactors, or SMRs, as a cleaner and more efficient way to power their operations.
It's a bold move, and it could pay off in a big way if these SMR projects are successful. They could not only reduce Bitcoin's carbon footprint, but also position it as a leader in sustainable energy innovation.
And that could be a game changer in terms of regulatory acceptance. Imagine if Bitcoin mining actually becomes a driver of green energy adoption. That would flip the script entirely.
It certainly would, and it speaks to the adaptability and innovation happening within the crypto industry. It's not just about code and algorithms, it's about finding solutions to real-world challenges and pushing the boundaries of what's possible.
This is why I find the crypto space so captivating. It's like a living laboratory where ideas are constantly being tested and the pace of change is relentless. It's both exhilarating and, honestly, a little bit terrifying.
I understand that sentiment, but that's also what makes it so important to stay informed and engage in thoughtful discussions like this. Because the decisions being made today about crypto will have far-reaching consequences for the future of finance, technology, and even society as a whole.
You've also flagged a headline about Tether, the largest stablecoin by market cap, hitting a record-breaking $100 billion in reserves. This is significant because stablecoins play a crucial role in the crypto ecosystem, providing a way for traders and investors to park their funds in a relatively stable asset that's pegged to a fiat currency like the US dollar.
Tether's dominance is undeniable, but it's also a source of ongoing debate and scrutiny. There have been questions about the transparency of its reserves and whether they are fully backed as claimed.
So, is this a sign of growing trust in Tether, or are there still systemic risks lurking beneath the surface?
That's a question that continues to divide the crypto community. Some believe that Tether's size and adoption make it a systemically important institution, and that any instability could have cascading effects on the entire market. Others argue that Tether has weathered multiple storms and proven its resilience.
It's a reminder that even in a decentralized world, there are still points of centralization that can pose risks, and it highlights the need for greater transparency and accountability within the stablecoin market.
Absolutely, but it's also important to acknowledge that the stablecoin landscape is evolving rapidly. We're seeing the emergence of new decentralized stablecoins that aim to address some of the concerns surrounding Tether. So it's not a static situation, it's a dynamic space with ongoing innovation.
I think that's a key takeaway from our deep dive today. The crypto world is not a monolithic entity. It's a complex and ever-changing ecosystem with competing ideas, technologies, and visions for the future, and that's what makes it so fascinating to follow and analyze.
I couldn't agree more, and it's important to remember that this is still a relatively young industry. It's going through growing pains, experiencing both triumphs and setbacks along the way.
And that's why it's so crucial for you, our listener, to stay informed, critically evaluate the information you encounter, and form your own opinions about the direction of this industry.
Don't just blindly follow the hype or the fear. Do your own research, understand the underlying technologies, and consider the potential benefits and risks.
Because ultimately, the future of crypto will be shaped by those who are actively engaged, asking questions and pushing for progress. As we've been talking, I keep thinking back to that quote from BlackRock CEO about tokenization reshaping the $100 trillion asset industry. It's a bold statement, but it really gets to the heart of what we've been discussing today.
It highlights the potential scale of disruption that crypto represents. We're not just talking about a new way to buy and sell Bitcoin. We're talking about a fundamental shift in how we think about value ownership and the very fabric of the financial system.
And it's not just about finance, right? We've touched on NFTs and how they're being used to represent ownership of digital art music, even virtual real estate. But the applications of blockchain technology go far beyond that.
Absolutely. We're seeing blockchain being explored for supply chain management, voting systems, identity verification, and even healthcare records. The possibilities are truly vast, and we're only just beginning to scratch the surface.
It's almost overwhelming to think about the potential implications of all this, and it makes me wonder, what kind of future are we creating here?
That's the million-dollar question, isn't it?
Yeah.
And I don't think anyone has a definitive answer. But what we can do is look at the trends we've discussed today and start to envision different scenarios.
So let's play a little game of future casting. What are some of the potential paths that crypto could take in the coming years?
Well, one scenario is that crypto becomes increasingly integrated into the existing financial system. We see more institutional adoption, more regulatory clarity, and more mainstream acceptance in this world. Crypto becomes just another asset class alongside stocks, bonds, and real estate. It loses some of its rebellious edge, but it gains legitimacy and stability.
That's one path, but what about the other end of the spectrum? What if crypto goes full-on cyberpunk, embracing its decentralized roots and challenging the established order?
That's certainly another possibility. We could see the emergence of decentralized autonomous organizations, or DAOs, that operate outside of traditional corporate structures. We could see the creation of entirely new financial systems that bypass traditional banks and intermediaries.
And what about the role of governments in all of this? Will they try to control and regulate crypto, or will they embrace its potential?
That's one of the biggest wildcards, as we've discussed. Some governments are exploring CBDCs, which could potentially coexist with or even compete with cryptocurrencies. Other governments might take a more adversarial approach, seeking to restrict or even ban crypto altogether.
It's a complex landscape full of uncertainties and potential pitfalls, but it's also a landscape brimming with innovation, creativity, and a sense of possibility.
And that's what makes it so exciting to be a part of this space. We're witnessing the birth of a new technological paradigm, and it's up to all of us to shape its direction.
So what does this all mean for you, our listener? What should you be doing to prepare for this future, whatever it may hold?
I would say the most important thing is to stay informed. Don't just blindly follow the hype or the fear. Do your own research, understand the technologies involved, and consider the potential implications, both positive and negative.
And don't be afraid to experiment. Dip your toes in the water. Try using a crypto wallet, explore different blockchain projects, maybe even make a small investment if you're comfortable with the risks. The best way to learn is by doing.
Absolutely. And remember, this is a marathon, not a sprint. The crypto world is constantly evolving, so be prepared to adapt and learn along the way.
It's been an incredible deep dive into the world of crypto, and we've covered a lot of ground, but as we wrap up, I want to leave you with one final thought.
The future of crypto is not predetermined. It's being shaped right now by the actions and decisions of individuals, companies, and governments around the world.
And that means you have a role to play. So stay curious, stay engaged, and let's build this future together.
Thanks for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep pushing the boundaries of what's possible.
We'll see you next time on The Deep Dive.
If this video helped, hit the like button, subscribe for more crypto content, and I'll see you in the next one.